Hello guys. Welcome to my Zoom meeting, guys, Zoom channel, and this is, as you know, USD to Ghost. This is I think this is the fourth lesson on market structure and strategies and trading plans. So, as you know, guys, my name is USD to Ghost. My YouTube channel is Snazfred. You can catch me on Instagram. US_30_ghost. And let's get to it. I should have a few people joining me. I don't know if they are able to connect or what, but I'm here. Okay, you can open a chat when you are logged in and send a message to ask anything you want. When you join, make sure you switch off your mics so that you don't interfere with the meeting. So man, thank you very much for the comments and everything and subscribes. I'm hoping that this family grow and we would enjoy trading together, and I'll give you tips on how to trade and how to enjoy trading. I'm excited to show you something. Before we move on. The last time I made some analysis, man, and I was so excited about those analysis. As you can see, this is this chart. This is this chart. These were the predictions that we are buying the market. These were the predictions that we are buying the market, and the chart played out how we wanted it to play out. So hey, this is exciting, guys. And as you can see, first take profit hit, second take profit hit. So as I said, guys, learn to mark your imbalances. As you can see, when the price came here, is used this as liquidity. So if you had bought here, the market here, you will still catch your take profit. But if you had waited for the market to catch your imbalance, also, you would still be in profits, but we have long way to go. We have a long way to go. We are trying to reach this take profit here. Second take profit. From here, the market was here. It came back down to imbalance, and take profit is hit. It comes back down. It's still moving. So what I think is this price is still going to use this and this as liquidity to take you out. It has to come back to this demand zone. It has to come back to this zone. I have my market imbalance here, and yeah, actually came back here, and you're in there. Let me show you. The market imbalance. This was the market imbalance. The moment the market gets here, when you're trading imbalances, the moment the market gets here, you're certain that I am buying, right? I am buying. So the market came here, then shot up, right? Came here, shot up. So you mark your imbalance. Let me show you. Let's get back to the picture. As you can see, our imbalance. This is where we marked it. We're waiting. This line, we're waiting here. This is the same line. We're waiting here for the market to touch exactly covering your imbalance. We're looking only at an imbalance. Huh? We're looking only at the imbalance. So if you are trading imbalances, It's not trading chart patterns, nothing related to that. You're trading only imbalances. You'll be certain that when the market comes to your imbalance, the moment it touches here, orders. Fills your orders. Wow. Yo, that was exciting, guys. That was exciting. That was exciting. That was a sniper entry. That was a sniper entry. Yo. Anyway, I just wanted to pass by this and say, guys, market played out very beautifully, guys. Played out very beautifully because we still have a long way to go. We still have a long way to go because I was looking at market covering imbalances because we're looking for the market to move in a good corrective mode before it takes a decision, looking at our higher time frames. So what we are saying is we had an impulse. This was our impulse. This is our impulse. So the market is correcting, and during this correction, we are saying we want the market to move in a corrective mode, and we get our buys going to the upside, right? And we get our buys going to upside. Then we decided, okay, we have a demand zone here, which is our point of interest, right? We have a demand zone here, and our first take profit is this one. This was our first take profit. Then market comes back to your imbalance, right? Comes back to imbalance. Then what happened? Boom. Right? Short. This is 15 minutes, guys. This is 15 minutes. Let's get 5 minutes. Let me show you this move. All right. See? This is what I'm talking about. This is what the market did. Here, the imbalance covered. Kimby covered the imbalance. Right? Then you're holding the market from here till here, or you can hold. But one thing you should be careful with, guys, is the market not playing out as you anticipated. Because what we are doing is we are predicting the direction of the market based on our skill, right? And if the market doesn't move according to your prediction, or the market does not, okay, sorry, the market does not play how you intended, or how you predicted the market would play. Sorry. You should be able to understand, and from that point, understand when you make predictions, right? When you make predictions, you should have a second opinion on what might happen, right? Like let me show you something. Here you have this is a high. I didn't mention on a high time frame. I said this is a high probability setup. Why was it a high probability setup? Because we had more than three confirmations. We had the market direction from a high time frame. We had the market imbalance going down, analyzing, get the market imbalance. We understood that the market is moving in a corrective mode, right? We understood that the market is moving in a corrective mode. And we also had a demand zone, which gave us a certain confirmation that the market is going. The market came and gave us a demand zone, and you are certain that when the market covers the imbalance or gets your imbalance, if you like trading imbalances, you can take an entry. And when the market comes back to your demand zone, you can take another entry, right? So use your imbalances, use your demand and supply zones, and they'll work for you. I'm telling you this, they'll work for you. As you can see, our setup, very beautiful setup. Take profit hit after your imbalance. The imbalance. But another one, if you're not satisfied with the market only covering this zone, or from here, you wait here, you're waiting, because the market is going to use this as liquidity. It's going to use this as liquidity before it goes to the upside. Are we together? Okay. Now let's be done with this and get back to business. Let's get back to business, guys, as we want. Ooh. So the last time, guys, we talked. Okay, so today we are focusing on chart patterns. We're going to do chart patterns. I'm sorry about that, guys. My network is not really collaborating. It's not really collaborating. Okay. Let me do this. So we learned what kind of we learn how you can identify the kind of trend the market is in, right? Like the signs that the market gives you when it's in a bearish mode or when it's a bullish mode, and what you're looking for during those times. I told you, when the market is buying, you're looking for buys. When the market is selling, you're looking for sells. Be with the winning move, or winning trend, right? If the market is in a bullish trend, go with the bulls. If the market is in a bearish trend, go with the best, right? Don't most of the time people lose their money because they're going against the trend. Go with the trend. That's where the money is, right? Go with the trend. Okay. So okay. So guys, we have what you call chart patterns. These are the technical analysis where by people use trend lines to try to identify the patterns the market is forming as it moves, right? And you have what you call a channel support. Channel support is whereby channel support is whereby the market is moving between two right. So guys, this is how the market is moving. Let's say you have the market giving you this pattern, right? this pattern. So what you do is, during this time, you know that the market is moving between point A and point B, right? Moving between point A and point B. So let's say you have your market in an impulse coming from wherever is coming, then it starts to support like this, starts to move like this, right? You are not certain whether the market is buying or whether the market is selling. So what you do is you wait for the market to break from point A, point B, or from this to this, right? Then you can enter your market, right? So this can be a continuation and also can be a reversal. You're not certain. You're not certain what the market is doing, but the trick is when the market breaks the zone, it should be a tight zone, right? Not a big, not something big. It should be something tight where the market squeezes, then like finally breaks out. Then you're certain that the market is moving in a certain direction. So this is the war between the bulls and the bears. This is what I always talk about. Forex is a war between the buyers and the sellers, bulls and bears. Be on the winning side, right? The bulls try to take the market to the upside. The bears said, no, we are taking the market to the downside. Failed to break the zone, the bulls took over. Failed to break that zone, the bears took over. Failed to break the two. So this is how the market actually moves. The winning side will break this point going up, or right. So the banks here are placing orders. This is what you're going to talk about when you get to liquidity. The banks here are placing orders, so they can buy or sell the market, right? And if you're on the winning side, you be patient enough to wait for the market to clearly break this with a full candle. Let me show you something. Let me show you what I'm talking about. You right? The market should break your zone with a full candle. The full candle. The full candle. They wait for that candle, whether it's a 5 minutes candle or 15 minutes candle. You wait for that candle to close, right? Then another candle would form. Then the second candle would have to respect this zone before it moves to the upside. Okay, let me show you what I mean. When the market breaks with a full candle, comes back down, it should respect the zone before it continues. Right? So what you are certain of is this break, right here, don't be quick to take entries, because you might see that the market might do this, then give you a wick, then push to the downside. This is what you call liquidity. This becomes liquidity. This then liquidity. So if you have placed, let's say, if you had placed the entries here, market, what the point when the market breaks, then goes up, comes back, takes down your money, because you still have hope that market is testing and all that. So you wait for the market to come back to respect your zone, take your entries, then put your stop loss when you enter here. Guys, my network is not that good. I don't know what's happening. You'd have to excuse me. I'm sorry. Okay. Then your stop loss will be on the 50% of this zone. That's where your stop loss is, on the 50% of the zone when you enter here, right? That's how it works. So as I said, the market is supporting in a channel. This is called a channel support, right? Because the market is moving between two certain points, A and B. And when it finally breaks your A, wait for the retest of this zone, then take entries. And when it breaks your point B, your take profit becomes your look left, right? Then 50% of this becomes your stop loss. Because this is how it's going to play out when it breaks from the zone. Comes back to test, then right. So this is how you trade your channel supports. Then let's go through. Let's look for something similar in that market. Let's look for something similar in that market. Let's use H4. I'm sorry, guys. So guys, I'm sorry about my network. But let's continue, guys. Let's continue. We are in an H4 time frame. We are in an H4 time frame. As I said, this is how. So guys, we are going to look at this. We're going to look at this. This is a perfect example of what I was talking about. This is the perfect example of what I was talking about. So you have the market. Let's go to a 60 minutes time frame. I'm really sorry about my network, guys. We would continue on another video, part 2 and part 3. Let's end this video here so that we can start it afresh and record. So thank you, guys. My network is really giving me a headache right now. I don't know, man. But I'm sorry, guys. We'll continue on the next part. Just move to part B and you'll see me there. Please don't go away. I'm so sorry about this, guys. Let me start part B. So thank you.